Hi, everyone. Thank you for joining our panel on cross-chain DeFi. My name is Nathan Allman. I recently left the digital assets team at Goldman Sachs to build Ondo Finance, a new DeFi protocol dedicated to bridging decentralized and traditional finance. We're still in stealth mode, but you can check us out at ondo.finance or follow me on Twitter to learn more at Nathan Allman. So in the past year, we've seen an explosive growth in the DeFi space. Assets locked in DeFi now over $50 billion, but it's still only a few percent of crypto's total market cap. So far, DeFi has largely been associated with Ethereum, but a major potential avenue for future growth is cross-chain DeFi. So we've brought together panelists from across the blockchain ecosystem who each have their own take on this cross-chain DeFi future. Perhaps we could start off with some brief introductions. Daniel, do you want to kick us off by introducing yourself and your project?
Sure. Daniel, founder and CEO of Polkastarter. Polkastarter is a decentralized protocol for cross-chain pools and auctions. Basically, we are an IDO platform for projects to raise capital at the early stages.
Awesome. Evan?
Hey, thanks for having me here. My name's Evan. I'm the founder of Ampleforth, which is a cryptocurrency like Bitcoin, except it can be used to denominate stable contracts. We recently had a huge launch of our governance token called the Forth token, which you might have seen on Coinbase. And we kind of were a big part of last year's DeFi summer. So I'm excited to talk about this year and such. Thanks.
Thanks. And Mrinal?
Hey, everyone. I'm Mrinal Manohar, CEO and co-founder of CasperLabs, the software development shop that birthed the Casper network, which went live on March 31st. And apparently trading begins in a few days. I don't know. Depends on what exchanges choose to do. The Casper network is an enterprise-grade layer 1 protocol. Primarily does two things. It scales well without sacrificing decentralization or security through an innovative take on CBC Casper called Highway, which was formulated primarily by Dr. Kane, Dr. Daniel Kane, Dr. Andreas Fakler, and people at Cardinal Cryptography. And secondly, we provide enterprise-grade features, programming standards, and hope to accelerate real-world usage of underlying public blockchains.
Awesome. Thanks a lot. So I'll open up this first question to any of the panelists, but currently much of DeFi is built on Ethereum. This trend towards cross-chain DeFi seems to be accelerating. Is this a trend that you think is going to continue, and why do you think this is taking off?
I'm happy to talk to this one. I gotta say that I've always believed in a multi-chain universe, but I was pretty bearish about adoption in alternative chains to Ethereum all the way until the moment that DeFi really took off. So when we started to see some of the yield farming and liquidity mining, it became very apparent, right, that the desire to generate yield and financial returns is ideologically colorblind. You don't need to believe in one chain to rule them all or champion the cause of one kind of school of thought or another if there are simply yield generation or arbitrage opportunities across these new chains. And I think these new incentives are going to drive a great deal of cross-chain activity and adoption, like what we've seen with Binance Smart Chain, and hopefully we'll see some of that with Casper as well. And I really think that this is kind of going to be the golden age of cross-chain adoption, and it's on the backs of DeFi.
Yeah, I agree with it. I mean, there's DeFi is trying to enable people to participate in an economy in a decentralized manner. What the underlying tool that facilitates that participation is kind of irrelevant and should be irrelevant because there's lots of sets of infrastructure out there. And I think a lot of protocols, especially in the DeFi space, are becoming more and more platform agnostic. And I think that makes sense, right? If you think about brands that you use for devices, headsets, mice, etc. They all plug into USB, and I think this kind of like standardization across the industry and cross-chain interplay is just inevitable. people want to try different flavors of things and decide how much. You also want to fail safe, right? You can decide how much you want to put on one set of infrastructure and how much on the other. So totally agree with that.
Yeah. Just to add to that, I think what we see at Polkastarter is a lot of projects seeing the issues Ethereum currently has with the gas fees and the transaction costs, and they're looking for solutions to help their projects thrive at this moment in time. And I think that's one of the reasons you see BSC becoming quite popular. Polygon, I think we see a lot of projects moving to Polygon right now to take advantage of their platform. And I think the liquidity and the user base is moving to these different chains, and that's why we see quite a lot of innovation there as well.
Yeah, certainly congestion on Ethereum is a major driving force. I mean, Daniel, on that point, do you think that Ethereum 2.0 and the increased adoption of layer 2 from some Ethereum DeFi projects, do you think that the growth of all of that may slow down this movement of DeFi to other chains?
I mean, we have some fork in July, I think, Ethereum, which is looking to improve some of the current problems, and Ethereum 2.0 is still quite far away to really make any predictions in that regard. But Uniswap will launch Optimism, I think, in a couple of days. So we will see how that's going to impact their usability. We have others like ZK Snarks and one project which is launching soon. They have another layer 2 solution on Polkastarter. So we have to see if that's the way forward for layer 2 solutions to optimize the problems Ethereum has, or if it's really going to be like Casper, like Polkadot, like Cosmos, which are providing a different kind of framework for chains to launch. And I think we will see.
Cool. Pivoting a little bit, what do you think will incentivize institutions to engage in DeFi, beyond just holding crypto? Are there other protocols that are doing things different than Ethereum to better appeal to institutions? Oh, I think you're muted, Mrinal.
Oh, sorry. Yeah, can you hear me better now?
Yeah.
Yeah.
All right, great. Yeah, I can take a first crack at that. I think there's 3 fundamental things that need to be solved for institutions and large enterprises to really, really care about this. The first is energy footprint, because ESG compliance is becoming more and more important. Like, holding crypto is different from actually using the underlying technology, and companies especially now need to tell their boards that they're ESG compliant, and therefore being energy efficient at the layer 1 level is extremely important. Pure proof of stake systems largely fix that just by eliminating the hashing on proof of work. But over and above that, optimizations on how message passing happens and how VMs get more efficient is going to be important. The second thing is ensuring that the underlying products are enterprise grade. Enterprises always want to eliminate key man risk. And one of the issues with many of the chains today, although most of them are moving away from this, which is great for the industry, is they use proprietary programming languages, which A, makes it hard to staff an organization to use these platforms, but B, also, creates massive key man risk. If you have your 3 Solidity devs, it's not like there are millions of them out there. There's like 10,000, maybe 15,000, and they demand 5x more money or we're going to walk. You're kind of like really limited, versus if that your staffing and your ongoing ability to maintain the business is secure. And third, and I think maybe most importantly, although this is a few years away, is we need standardization of asset classes. So if you think about, like I gave the USB example earlier, any device can plug into any company, any computer or anything else, because there's a standard mode of communication. And what's really, really important is to have those standards in finance. Like, what does a payable at maturity look like in the blockchain world? What does a mezzanine debt instrument look like in the blockchain world? So right now we have lots of individual, call it pockets of what it looks like on each platform. But for the industry at large to attract institutions, I think some level of standardization needs to be done.
Yeah, I would say, just to kind of set the context, that the way we at Ampleforth anyways view DeFi is kind of like, if you think of crypto as a new generation of digital precious metals, you can think of DeFi as kind of this new generation of simple banks, or basic instruments and banks that kind of allow you to exchange and lend and borrow these precious metals. And looking at it in that lens, we're much closer to like 15th century Venice in DeFi today than 20th century England, right? And I think that we're going to go through this financial revolution of going from these kind of rocks through all the way to the issuance of banknotes. And so I think we'll start to see a lot of financial instruments and derivatives that extract and resegment the risk in these underlying rocks and kind of shift it and push us towards this kind of more 20th century view of kind of finance in the traditional world in this parallel world, right? So we need to get to the, we're in the future past, and we need to get to the future present before we can get to the future. And I think all these new instruments are going to be inherently interesting to professional investors, but I don't know that they can necessarily actively participate because they have all sorts of requirements, right? Custody, this and that. I think the fastest way for institutions to get involved in DeFi today is probably by investing in funds, right? That look something like a combination between like a venture capital fund or a credit fund or something like that, which can kind of make some of these early stage bets, but then also be really active in, for example, like providing liquidity and participating in all these kind of new and creative instruments to generate yield. So the other big kind of step that we saw was like, we went from a world where it was like, when does the price of a coin go up? When does number go up? When does Bitcoin go up? To like, oh, wow, that's a really attractive APY, right? So you're going apples to apples, an interest or yield rate, just the vocabulary of that, comparing X% to 10X% is different. And that's been enabled by kind of the innovation of new instruments that's been enabled by smart contract programming platforms on the backs of this whole DeFi movement.
Yeah, fully agree with funds and other sorts of traditional vehicles being needed, at least in the short term, in order to onboard institutions into DeFi directly. But I think over time they'll be able to participate more actively, especially if we start to see any sort of semi-permissioned DeFi in the future.
Sure, totally.
I mean, institutions go where money is, and the money is currently in crypto, and we will see negative interest rates in the world coming up more and more because, with the COVID expenses, countries will have to print a lot of money. So I think we will see a lot of adoption of institutions.
Yeah, there's quite a disparity between the yields accessible in DeFi today and elsewhere.
Yeah.
Cool. Perhaps, I guess just wrapping up, after this year of explosive growth, both in DeFi and in, retail investing, what do you think the next year is going to look like in DeFi? Are we going to have a DeFi summer round 2?
I've been praying for DeFi summer round 2 for almost 1 year. So fingers crossed. I think it's very possible. There's just more to work with. There's still a lot of liquidity in the space. Maybe, interest rates will increase a little bit and people pull back a little bit. But I think for the summer, yeah, there's a chance. And the great thing about DeFi summer last time was we were able to kind of generate traction without Bitcoin mooning, right? So that's the beauty of these new financial instruments. You can kind of shift the risk. You can smooth it out across time. You can move it around with the liquidity that's out there right now. I think it's very possible that we'll see another DeFi summer, but nobody can say for sure.
Yeah, I agree with Evan. If I were to just add to that, what was great last time was, what Evan said, you can shift the risk. It's not completely based on where Bitcoin is. That being said, the unfortunate truth of the matter is just relative interest and new entrants into the market correlates pretty heavily with the overall market cap of the industry, not just Bitcoin. Bitcoin tends to be a leading indicator. So I'd say, if market conditions persist or get better, I think it's almost inevitable that it'll happen. There's enough interest, and especially if you see social media and like just general Google searches, it's one of in the technology realm, one of the most tracked things out there. So long-winded way of saying, if market conditions persist or get better, I think it's inevitable. But it still could continue, even if they compress a little bit.
I mean, we get a lot, around 10 projects applying to Polkastarter a day, and currently we see most of them being NFT projects. So I think currently we are on the full NFT craze, but I can see that there's a lot of innovation happening where NFT and DeFi are being combined to create innovative ways on how to bring liquidity to various concepts. So I think there will be a slow transition and amalgamation between these two. And I think we will see some new kind of innovations in this space, which will then bring a new enthusiasm to the market.
Yeah, totally agree. I mean, to Evan's point earlier, there's a really long roadmap of traditional finance products that have yet to be ported over to DeFi. And I think those will be some major catalysts for future growth.
Oh, yeah.
Awesome. Well, I think we're just about out of time, but thank you all for joining. And yeah. Awesome.
All right.
Thanks
Thanks very much for having us.